Hi everyone and welcome back to today's morning report with me, Richard Perry, market analyst at Hantech Markets for Tuesday the 22nd of April. The final chart I'm going to look at today is gold. And gold has been under pressure in the last few days once more, having bounced back towards that 1330 mark. It's back under pressure and it's now retesting this 144-day moving average, which is for some considerable time on this gold chart been a very good gauge for the price. So that currently comes in at 1282, 1283, and we need to be watching this as a key low. Last couple of days we've been testing it, and I think it could continue to be the big test for this chart, certainly on the daily basis anyway. The momentum indicators are not all that positive anymore. Certainly you'd say that the stochastics are in decline, the RSI continues to fall away, MACD lines are just under neutral. So a slightly negative skew on these momentum indicators on the daily chart. On the hourly chart, this is the intraday, I've zoomed out slightly here to show you that we could, as I said, if we held on to this is me with my very positive hat on, if we could hold on to these key lows here, we could end up with some sort of basing pattern underway, but certainly you're not going to be looking at that until, I think, you break above that break above the 1300 mark, which I think is acting as once more a pivot level. Gone slightly above it on the trading day on the 16th and 17th. However, I think it's still going to be acting as a gauge. We had a reaction high around about there yesterday. 1390 was the yesterday's key high. And I think that is going to be the sort of gauge that we need to go on the upside. If we can break back above 1300, then you're going to be looking back towards the upside again. But I think it will, in the meantime, provide it as a ceiling to resistance for any rallies. As I said, you've got a slight bout of consolidation with a couple of higher lows in the intraday basis last day or so that we need to be mindful of slightly, but there's no real attempted recovery as yet, and still the moving averages are basically in decline, and the momentum indicators are certainly in negative configuration as well. So it would suggest that the downside pressure remains on for the time being, and that would tie in with this test of that 144-day moving average that we're seeing on the daily chart that comes in around 1283 at the moment. So key time, as I said, for this gold chart, and it needs to sustain this support, otherwise you're going to be starting to think about significantly lower targets. The daily chart key low is at 1277, and that certainly needs to hold if we're not going to start to have to talk about the declines back towards the 1240 area. So that is, I think, the key thing that we need to be watching out for in the coming days. And I wish you good luck in your trading on gold today. Don't forget this existing home sales data comes out at 3 o'clock US time. 3 o'clock UK time. Any sort of strength of the housing numbers would be dollar positive and theoretically gold negative. So that could happen at 3 o'clock this afternoon, and I wish you good luck in your trading until then. Thank you.